Understanding Accounting, a guide for new students. Accounting is essentially the language of business. It is a systematic way of identifying, recording, and communicating the financial transactions of an organization. Understanding accounting is crucial because it helps you make informed decisions by providing insights into the financial health and performance of a company. Why study accounting? Accounting is not just about numbers. It's about understanding what those numbers mean for a business. It consistently ranks as one of the top career opportunities because it offers a wide range of job options and is crucial for the success of any business. By studying accounting, you learn to track and analyze financial information, which is essential for making strategic decisions. The 3 basic activities of accounting. Let's break down the 3 core activities of accounting to make them easy to understand. 1. Identifying economic events. Definition. This involves recognizing which transactions or events affect the financial position of the business. Detailed examples. For a retail company like Walmart, identifying economic events includes recognizing when products are sold, when inventory is purchased, and when employees are paid. For a tech company like Apple, it includes identifying sales of iPhones, payments for raw materials, and receipts of money from investors. 2. Recording economic events. Definition. This step involves documenting these identified events in a systematic and chronological order. Detailed process. Imagine you own a small bakery. Each time you sell a loaf of bread, you record this transaction in your financial records. You also record expenses like buying flour or paying your staff. This documentation is done in monetary terms, meaning every transaction is assigned a value and entered into the accounting system. Examples. When a car manufacturer like Ford records a sale, they note the sale date, the amount received, and update their inventory to reflect the sold vehicle. When Starbucks records a transaction, they include the cost of coffee beans purchased and the revenue from coffee sold. 3. Communicating economic events. Definition. This involves compiling the recorded data into reports and presenting it to stakeholders. Detailed examples. Financial statements are the most common way to communicate financial information. These include the balance sheet, income statement, and cash flow statement. For instance, when a company like Amazon prepares its financial statements, it includes total sales revenue, expenses, net profit, and cash flow for a specific period. Investors, creditors, and management use these reports to make decisions. For example, investors might look at Amazon's financial statements to decide whether to buy or sell its stock. Analysis and interpretation. Understanding accounting also involves analyzing and interpreting financial data. This helps in making strategic business decisions. Analysis. Use tools like ratios, e.g., current ratio, debt-to-equity ratio, percentages, graphs, and charts. For example, you might use a profit margin ratio to see how much profit a company makes for every dollar of sales. Interpretation. Explain what the numbers mean. For instance, if a company's debt-to-equity ratio is high, it might indicate the company is taking on a lot of debt to finance its operations, which could be risky. The role of bookkeeping in accounting. Bookkeeping. It's the process of recording financial transactions. Think of it as the foundation of accounting. Without accurate bookkeeping, the financial data would be unreliable. Accounting. It encompasses bookkeeping, but also includes identifying and communicating financial events. It's a broader process that provides a complete financial picture of the business. Putting it all together. Let's use a practical example to tie all these concepts together. Scenario. You start a small business selling handmade jewelry online. Identifying economic events. You identify events such as purchasing raw materials, beads, string, making sales, revenue from jewelry sold, and paying for advertising on social media. Recording economic events. You keep a detailed record of each purchase and sale. For example, you bought beads for $100, sold a necklace for $50, and paid $20 for an Instagram ad. Communicating economic events. At the end of the month, you prepare a financial statement. Your income statement shows total sales of $500, expenses of $300, materials, ads, etc., and a net profit of $200. By the end of your accounting course, you'll be able to understand, analyze, and interpret complex financial statements, enabling you to make informed decisions and understand the financial health of any business. This foundation will serve you well whether you pursue a career in accounting, finance, or any other business field.